Welcome back to Small Caps, ladies and gentlemen. My name is Kerry Stevenson. Today, I've asked for Marc Henderson. He is the President and CEO and Director of Laramide Resources. They are listed both on the TSX and the ASX, and the code's really easy, LAM. LAM in the TSX, LAM in ASX. They're also on the OTCQX. Got to look this one up, Marc. It's the LMRXF. That's a bit more of a mouthful. One of my favorite subjects, it's uranium, and they have assets in the US as well as Australia. So we're going to get to all of that. Marc, great to see you. This is our first time chatting. Welcome to Small Caps.
Yeah, thank you very much, Gary. Very happy to be on with you today.
Well, we're happy to have you here. And because it's our first time chatting, can you just give us a brief overview of who are Laramide? I mentioned assets in US and Australia, but you're much better to give us the brief overview.
Yeah, so we are a uranium development company of some long standing. We have been in the space now for approximately, I guess, 15 plus years. I mean, obviously that seems like a long time. There was a gigantic hiatus in there for anybody that's been following the space based on what happened in Japan post Fukushima. So we kind of refer to ourselves as one of the companies in the uranium survivor group. And that's kind of a small select group of companies that kind of made it through to the other side of the valley, Death Valley, if you will. You know, and are now in a pretty interesting position because obviously we think the prospects now for bringing new development stuff online is looking very, very promising. Uranium's really having a moment here with the energy crisis and everything else that's happening in the world. So we really we're pretty pleased that we stuck around and are going to be able to take advantage of the opportunity going forward. We have sort of a barbell kind of portfolio. We have big chunky asset in Australia, which I'm sure we'll be talking about, which was the foundational asset. And then we have an asset that's an ISR asset, which is solution mining. It's ISR stands for in situ recovery. For those that don't know that methodology or whatever, it's basically how all the uranium in Kazakhstan, which is the largest producer in the world, gets produced. Very common, deemed to be environmentally more friendly, if you will, because there's no PET or what have you. So that there are assets of similar size resource-wise. They both have 50 million plus pounds. And they're both assets of scale and would be considered assets of scale to the utility industry. And we built the company really with the view of having a multi-portfolio company with multiple assets to be kind of a supplier of choice to the utilities. Because ultimately, everything you do is basically sold to the utilities. They're the backbone of. They basically are what creates all the cash in the industry.
Thanks, Marc. It's interesting because you have. I mentioned earlier you've got assets in the US, and we'll go into them. US and Australia. Good jurisdictions geopolitically. Is that why you chose those two areas? Did they cover? I'd be interested, and I'm sure our audience would, as to why you chose Australia and the US, not Canada.
Well, we obviously, obviously like Australia and the US as jurisdictions, and we did that. That has become really part of the raison d'etre of why we're in those things. And I think you do want to be in jurisdictions that matter. And I do get that question quite a bit because I'm in Toronto right now. We're Canadian-based company, and by the way, we have a big. The underpinning of our electrical system here is half nuclear. It's sort of 50% nuclear, 30% hydro, and a little bit of very expensive renewable stuff that sort of wishing we don't had to pay for, but we've sort of layered that on as we phased out coal. So Canada is a nuclear place. We have nuclear power plants. Saskatchewan, which is one of our provinces, is outside of Kazakhstan, the next biggest producer in the world. So people always wonder, well, why aren't you in Canada? Yeah. And I think specifically, we started with Australia because we were fortunate enough to have an opportunity to get what we thought was a world-class asset before the previous boom took off. And we kind of built the company around that. But I think what people that sort of follow the space and they know about Canada, it's a very different business proposition, exploring and developing things in Canada. I basically say it's for brave hearts and deep pockets, the nature of the exploration.
Oh, okay.
You're looking for very high grade, very small buried targets, typically down 500 to 1,000 meters. So you've got to get very lucky in the first place. And then if you're lucky enough to find something, obviously the follow-on development proposition is really not something certainly not for juniors. And it's, even mid-tiers given the CapEx hurdle. So there has been a few successful things like that have been found in Canada, but if you were building a business plan around first that you're going to go out and find one of these things, That just didn't really fit our bill. We like historically have like to be around things that were late stage, development stage assets, et cetera. And sort of that's how we were started with the company. And we were fortunate enough to get in this thing in the last cycle before the previous uranium cycle took off, which was a doozy.
Yep.
And we went from $7 a pound at the bottom to $135 a pound at the top over a 5-year period. And so it was, it was quite exciting, as you can imagine. And there were many, many Australian juniors in the club before it was all over. It was a pretty big party. I think we went from 10 companies to 700 companies.
Yeah, it was something insane like that.
Yeah, no, it was interesting. And so, as I said at the top there, we're the survivor group. So the survivor group is really 25 or 30 companies that are left from that 700 that were around 10 or 15 years ago. Yeah.
Well, let's talk about what you've got, because that was really, I found that fascinating, your view on Canada, and that's why you're in the US and Australia. Let's start with the US assets, if you like. Where are they? What are you doing with them?
So our main asset is an asset called Church Rock in New Mexico. It's an ISR asset. It's a legacy asset that was found at the tail end of the first big uranium boom, which was the American boom, when all the American plants got built out. There was a corresponding exploration development boom that paralleled that build out of the American plants. And that all happened in a 10-year period from 1970 to 1980. And they went from no plants to 100 plants. Wow. And before the decade was out, basically every geologist in America was looking for uranium, and all the energy companies, the oil companies, were all in the uranium business in one form or another, because nuclear was the future, right? The tagline was electricity is too cheap to meter, was the tagline of that era. And so a lot of things were found, and at the end of the day, we didn't need them all at that moment. And so the things that were decent, they'd go back into furlough someplace, and the bigger companies hang on to them for a while. And so the asset we have, Church Rock, was originally drilled out by General Electric.
Oh, okay.
Yeah. Because General Electric was in the nuclear business indirectly through United Nuclear, because they were instrumental in the power plant build out.
I get it.
So, yeah, I mean, nuclear, it all rhymes, right? And so that's actually very interesting, because there was a transaction done, I don't know if you followed it in Australia, but there's a very big, important transaction in nuclear last week where Cameco, combined with Brookfield, is buying Westinghouse, which Westinghouse was a company that was involved in all the build out of the plants in the 70s. And so it's all coming kind of full circle. And I do think, do I think the oil companies are going to get back in nuclear this time? I don't know. But the echo of that is what they're all trying to do in renewables. They're all trying to say they're in the thing, like BP became Beyond Petroleum, right? And so, but energy is energy, and we're obviously short of it in the world. And I think there's been because of this energy crisis, it's forced a lot of people, consumers and everybody else, the general population, to really try and understand the energy file more. And I think they're forcing the leadership to understand the energy file more. And I think that's very bullish for our sector, because I think as they do that, that's partly why nuclear is back in the conversation.
And it also, it feels like it's almost back in the conversation in a much bigger way, even in the last couple of months, because I'm hearing talk of some of these green funds are now turning around saying, well, we like nuclear because it's zero carbon emissions and it's very efficient. And with these small nuclear reactors, it's not a big footprint, et cetera, et cetera, et cetera. So it feels like right now people are beginning to understand that with an energy crisis, if you don't have nuclear as part of the mix, that's insane.
I think that's spot on. Like, it does seem to be sort of picking up speed. Like last week, as I said, was a big week. So we not only had this Cameco deal, and the branding thing around that is Brookfield. I think they're pretty well known in Australia because they own some infrastructure assets, but they're a gigantic company. They're a Canadian company, I think by domicile or whatever, but they're influential and they're very big in all sorts of asset markets. And they basically, by doing this deal, they kind of blessed nuclear. Yeah. And so the leader of that was Mark. I think the guy who runs the division is Mark Carney, and I think people have heard that name before. He was governor of the Bank of Canada. He was governor of the Bank of England. He was deemed to be one future potential Canadian prime minister, et cetera.
That's right.
And so last week you had both Mark Carney on the renewable good housekeeping seal of approval, and he had Greta Thunberg in the same week
Oh.
basically say, yeah, nuclear's okay.
So the narrative is starting to change. Talk to us about Church Rock. How advanced is it? Have you got permits? Is there infrastructure around? If the price is right, when are you going to be shovel ready? I guess what I'm looking for is, where is Laramide Resources with this asset in the US?
Perfect. So infrastructure, starting with infrastructure, like in comparison to what most folks that invest in Aussie companies, where a lot of things are fly in, fly out, it's 500 miles up a road to the site and all this kind of thing. This is a drive up thing that's, you know, it's 2 hours from Albuquerque. I mean, it's in New Mexico, which relatively speaking is more remote than other places in the US, but I mean, no, it's got power and all that. So that's all fine. It was permitted completely in 2015. The state of New Mexico changed the standard on one of their permits on the restoration standard on the permit. So we have one permit that we have to go back and effectively re-permit, but other than that, it's basically permitted. Some of the permitting is federal and is done by organization, Nuclear Regulatory Commission, which people may understand. NRC is the acronym. We bought the asset. We were the royalty holder, and we bought the asset from the party that had the asset, thereby getting rid of the royalty, which was a burdensome royalty. But we had to go through a process where the NRC license was transferred to us, and that was a fairly significant process that took 6 months. So all the permitting, but for this one state permit, is good to go. We need about 18 months of test work in order to do this restoration demonstration. At that point, it'll be shovel ready. There's a bit of work that has to go into doing that, including some drilling, and that's about to happen. And so the real work to get to the finish line on the permit, which is a 18-month, let's say 2 years at the outside kind of timeline, is really just starting now. And at that point, the thing about ISR though, it's because the nature of what you're doing is you're basically just drilling a well field. Particularly, we're not going to build a process plant in phase one, because there's a handful of process plants around the United States that you can custom toll at to start. And so that's quite a quick process. The construction is not like you would think of a construction of a typical mine, where you have lots of infrastructure and buildings, and even if it was an underground thing, obviously mine development and things like that. So start to finish to get the well field done is something that happens inside of a year. And part of the reason that ISR is particularly attractive to smaller companies is the CapEx is very much lower than would be for any other kind of traditional mine.
Yeah.
So it's quite an attractive thing. It starts at £1 million a year. And then we have an NRC license, and our NRC license actually dictates the way the project has to roll out, because we get to £1 million a year, then we have to demonstrate restoration in the field successfully, and then we get to phase it up. And we have the right to build a process plant at a different location that's 25 kilometers away in that exact location, which we can do at our choosing, but the first phase has to happen first. So it's very prescribed what's going to happen, other than this one final permit we need from the state of New Mexico.
Why would you build a processing plant if there are, 4 or 5 in close proximity where you can toll treat it? Why would you?
Economics, ultimately. I mean, I think it's less the CapEx, because the CapEx of that isn't the nature of most uranium mineralization is it's really quite simple. And so you don't have the complexity and the cost associated with that you'd have at a lot of, trying to process, base metal concentrate or something.
Yeah.
But it's more, no one likes to custom mill. They know who makes the money in a custom milling relationship, right? So it's like that.
Okay.
I think it's more that you'll hold your nose and do it for a bit. But I mean, I think you want to, if you're going to produce 50 million pounds, I think you want to.
Yeah, well, that's, and that was
like that. I think you want to get on with building your own thing.
Mark, is there a price where does the uranium price have to be at a certain level before you go in and get this shovel ready? Are you waiting for that price to get a bit stronger, or would it be good to go now?
No, I think we're good to go now on the ISR for sure. I mean, I would say both of our projects are in the lowest quartile of the cost curve.
Okay, so Church Rock is one. Do you have another one over in the US as well?
We've got a couple of other hard rock projects that are interesting, but they're for the sake of this particular introduction, I don't think it's really that relevant. They're nice hard rock things, though. We have one it's already permitted, ready to go. It needs to go into the only hard rock custom mill that exists in the United States, about 50 miles away. that mill is owned by Energy Fuels, which is a, well-known public uranium company, I think with a 1.2 billion market cap. They have to decide to reboot their uranium production. And they do that from some of their own mines and some toll type mines, and they need to put a plan together to basically run the mill effectively.
Right.
And I think until they give the green light on that, we're not moving too quickly. We can move quickly once they've done that, and we had a custom milling contract with them in the past.
Okay.
And it's actually, that company's now run by a guy, Mark Chalmers, who used to actually be the COO at Paladin. He's actually from Adelaide, or he's American, but he lived in Adelaide. He ran Beverly Mine over there, so he's a well-known guy in the uranium industry globally, but particularly in Australia.
It's a fairly small community in a way, isn't it, the uranium industry? Because and I want to come to the Australian assets, but just before we do, you've recently been to a conference in London, the World Nuclear Association, was it? I just want to touch base on that quickly. What was the mood like, and what did you get from that?
It was good. I mean, that's the first conference they've had live since, I think, obviously 2019. And I hadn't been, we've been periodically probably in the 5 or so years before that. The biggest takeaway I would say for investors is that's the first conference I've been to in a long period of time where you really had a lot of investment type people and government type people really in there trying to figure out what nuclear was all about, where it was going. There were panels on SMRs, which is a popular thing that people are talking about. The mood of the industry, I would say, was really quite good, that this is really going to be happening now. The industry's in a good place. I mean, for a lot of time, they would be doing a lot of navel gazing about that the industry was in trouble post Fukushima, right? And it seemed to be in a, when they're closing plants, they closed all of the plants in Japan. So you can imagine the mood of the industry. So I would say it's a 180 from there. And people are really quite optimistic. And there's a lot of interesting new things that are happening on the horizon, like SMRs. They had a panel where the American government was there, and they're trying to be very proactive now too about, making people understand that they're kind of for an all of the above energy policy. And so I think they had the deputy of the DOE on the uranium side or the nuclear side there. They're trying, and I think in that recent legislation they passed, there's a bunch of initiatives there specifically for uranium plants, including, I think there's a production tax credit for existing utilities. Because what they don't want to have happen is that the other thing is that you had the producers on one side that were gloomy, but you also had the utilities, because the utilities had different sets of issues around things like the cheap natural gas price, which they were getting all their pricing off the price to make electricity out of natural gas. And so for a long time, there was a lot of talk about American nuclear plants being in trouble. And now they've flipped from that to getting life extensions. So like in terms of where the demand profile of the space is now, it's actually very healthy and getting better all the time.
Which I'm really thrilled about, because I'm quite bullish on the sector. Look, let's get into Australia, because I'm talking to you from Australia. You're up in Toronto. Australia, 2 projects, one in Queensland, one in Northern Territory. Can we start with the Northern Territory? What have you got there? We'll end with Westmoreland, which is in Queensland. But let's start. What have you got in Northern Territory? And
sure.
Why
the project in the Northern Territory is really an extension of what we have in Queensland. And the reason we did it is, number one, we had a relationship with Rio Tinto because of our relationship around Westmoreland, and they were the holders. And so we went to them and said, hey, can we do a bit of exploration over here? And we had a JV originally, and that ultimately turned it into a situation that we bought them out completely, but they have a typical big company back in. And if we find $1 billion discovery, they get the back in, but we'll live with that. But it was really a thing done to consolidate ultimately the potential of the district, because obviously owning an entire district is valuable. And so it's early days, though. We've just done the preliminary stuff. I mean, excited. We want to get in there drilling, but that's really the next thing that's happened. We've done the geophysics. We've done a bunch of geochem. The next phase will be drilling, but it's greenfield. But I like greenfield, and I think this cycle also. I think one of the defining things of this cycle is going to be before it's over, because I think the requirement to fill the production gap is so big that people are going to have to get out and start exploring again. I mean, we're still living off all these legacy assets from the 70s and things, right? So it's useful to have one of those in the hopper, if you will. So I would put that in that basket, that greenfield basket.
Okay.
Which is good.
Which is good. And now here I'm going to come to one which I find a little bit tricky. And that's Westmoreland because it's in Queensland. I know Queensland well, and Queensland do not allow uranium mining. So what's the point? Sorry to be rude, but what's the point of having an asset in Queensland when you can't do anything with it?
Yeah, so you're really referencing the politics of Queensland. So
Yeah, I guess I am.
this is a Labor Party, and we lived through the whole thing. So we started with the asset when not only could you not do anything with it in Queensland, you couldn't do anything with it federally because Labor wouldn't give you an export license to do anything. And they had this, remember that so-called 3 mines policy?
Oh, that's right. Yeah.
We actually lived through the whole thing. We went to the party conference where they got rid of the 3 mines policy. And so federally, and you need 2 permits to do anything in Australia. You need an export license and you need your local state permitting. And so now federally, both parties are the same. And, you know, the Labor doesn't like, I guess they don't want to do nuclear power plants, at least not yet. You know, they didn't really want to talk about it, but they're good to go on any uranium production. And they left it to the states, and the states were okay with it. For basically political reasons around the way the voting happens and the way parties have to appeal to third parties in order to get majorities. This was an issue that was beloved by the Greens, and basically, in order for the Greens not to pull votes away, they basically kept this anti-nuclear thing. But what you learn is, I don't think anybody in Australia or even in Queensland thinks Labor's the permanent government of Queensland. And so in a 2-party system, eventually the other lot gets in, right? And that's what happened to us in 2012. Unfortunately, this was a year post Fukushima and the price was miserable. Yeah. And then the government that should have been in for more than 1 term got tossed after 1 term, and we're back to more Labor. But I mean, one of 2 things is going to happen. Either we'll be back to the other party in some period of time, at which point the asset is 5x, 10x, you know, overnight, or the government just decides that if Greta likes it, what are we doing? And right, are we going to be the last people in the world to figure out nuclear is okay?
Yeah.
And at that point, you get your 5x or 10x or whatever the number is, like in a surprise. Because what happened in the last cycle when the Campbell Newman government got in Queensland and they basically decided that they were going to let's get on with it. There was a press conference, there's a 5-minute press conference. The thing people may or may not understand is there's no laws or anything around it. There's nothing that has to change. So basically the government just has to give it a nod and a wink that we're good to go now. And anybody can do a nuclear thing. They just won't, when they issue you an EPM there, they say, you realize that you can't build a uranium mine in Queensland, but that's while they're running it. But they don't have, nothing has to change legislatively. That's when you get, and there are places where you run into a sticky wicket with permits and things like that, where laws get passed and all this kind of thing. Those are much harder to kind of unravel.
Yeah.
This is a kind of a binary thing. The minute that Queensland decides either that the Labor decides it's past its sell-by date, the use of this policy, or they're not the government anymore, it's over. And
so let's assume that everything's okay, that they suddenly wake up and say, well, it's okay for Greta. I do find it hard to say that name. It's okay for us now. Green light, let's go. What do you have to do with that asset? Because Rio Tinto had it before you, I believe. Bit of work done on it. What are you doing at the moment? And if the green light was given, where's the value? I'm looking for the value uplift, I guess, for shareholders.
Of course, yeah. So a bit of work's a bit of an understatement. Like Rio was ready to go. They were going to build it as a heap leach back in the 90s. And so we took it from them, did a lot more work, because we probably subsequently spent $40-50 million. We've done a lot of subsequent drilling. We probably made it a little bit bigger. I mean, the asset does not need to get any better technically. It does not really need to get any bigger technically. I mean, it'd be nice to get a few more pounds. It probably goes on the mine life as opposed to the scale of it. And mostly it just needs the permits and build it. You know, get the permits, finance it, and build it. And the permitting process I do find in Australia, relative to some other jurisdictions, it's actually quite a bit easier because you don't have a lot of the, like in the United States and places like that, you have a lot of third-party advocacy groups that there's a whole concept of social license, which often more refers to communities and things like that. But it's sort of deemed to be communities that are impacted by the project, which is more localized. Whereas in the United States, interest groups tag onto these things because they don't like fossil fuels, for example. And so even though they don't live anywhere near the Keystone Pipeline, you must never have the Keystone Pipeline. And I don't find in Australia, you have quite the whole thing. And so every permit in America, the dirty little secret is every permit that ever got given in America, but the last 30 years got litigated by a whole bunch of people before it got to the finish. Yeah. And you don't have that culture in Australia either.
Well, how are you going to, again, playing devil's advocate, it's all good. You've got the permits, you're ready to go. How do you finance it? How do you construct it? What's the timeline? I'm just curious to see how much needs to be done and how you're going to go about it.
Yeah, the lead time on that is going to be longer than it would be for the ISR project we talked about because of the nature of it. You're building a process plant in a remote place. You got an open pit, so you got equipment. It's a much bigger CapEx exercise, probably $300 million US sort of thing. We always envisaged that project as being underpinned by utility contracts, probably to the tune of at least 50%. And that's what you need to do in order to, which is really hedging, and then effectively that brings you your debt money because they're much more comfortable about the revenue flow of the project. So that was kind of the timeline for it. But we still think, and this is our company, when the last cycle, we're about 100 million market cap or something today. In the last cycle, our company was worth 700 million on Westmoreland alone. So in a scenario where everyone thinks it's good and you're fine and you're allowed to go, your market cap needs to be preferably a multiple of what the CapEx is. But I think you'll get to that kind of scenario in an environment everybody knows you can just charge ahead. So, there'll be obviously an equity piece of it, but it's much less significant when your market valuation is a lot more favorable.
Okay. Marc, I'm really sorry, but we are running out of time. What I want to do is, and I don't know if you've seen any of my interviews, but I love to finish it up, wrap it up, if you like, with a summary of 3 reasons, not 5, just 3 reasons why our beautiful audience out there should be sitting up and taking notice of Laramide Resources right now.
Oh, I think we're probably the sleeper company that's listed on the ASX. We don't trade much there. I think we're going to try and do something about that. I think we're going to try and get more visible there. So I think for your Australian audience, I think, we're coming to your town soon. And I think we've got probably the most room for valuation uplift relative to the assets that we own, number 1. Number 2, we're finally moving on things. We were a bit slow, but the process of, I didn't mention it, but we just started drilling actually up at Westmoreland on satellite targets and things like that. So we are doing things. There will be actually company specific news flow. And number 3, there's always the surprise. Like maybe you get a surprise and they wake up and say, "What were we thinking?
What were we thinking?"
And the government says, if South Australian uranium's okay, what's wrong with Queensland uranium? Because that when you think about it, it makes no ideological sense whatsoever, really. And it's hard to believe that you can promote coal and unpromote uranium.
Yes.
Those two things don't seem to me that they really should coexist, but it does right now. So
what a wonderful way to finish it up. You can promoting coal, but not uranium. That's, I hadn't actually, didn't.
I'm not going to say anything bad about coal. I'm just.
No, we love coal. We love coal. But you're right. There's a clean fuel source up there, and we have got an energy crisis. Let's hope that sanity persists and exists in Queensland. Maybe they'll watch this interview and have another think again. But look, lots of news flow, ladies and gentlemen. Marc Henderson is the president and the CEO. And as he said, it's a bit of a sleeper company on the ASX. So here at Small Caps, we like to bring you these. Hasn't really been talking a lot lately, but some fantastic assets over there in the US, as well as here in Australia. And we're looking forward to a bit of a bull market in the uranium space. But as always, do your own research and get in touch with Marc if you've got any questions. Marc Henderson, thanks so much for joining me on Small Caps today.
Thank you so much, Carrie. I enjoyed it. See you again.